Okay, we are live. We can start now.
Okay, so thank you everyone for joining this fortnightly outlook webinar. I am Vinay Rajani, a senior technical and derivative analyst at Prime Research of HDFC Securities. So today we are here to discuss about the global markets and Indian markets, technical developments, derivative developments, how we are technically placed and derivative data, what does it suggest, and how should we approach the next fortnight for Indian markets. So there has been a lot of volatility last week, and we are approaching a week which is a holiday shortened week by the Christmas. On Thursday there is a Christmas and there is a holiday, so there will be a 4 trading session in the coming week. So it is very important because in last 2 trading session there has been some positive activity happened in the broader market. So it is very important to know and understand whether this is going to be sustainable or not, whether it is a pullback or it is a reversal that we have to see, and whether large caps will perform better or mid cap, small cap will see a relief rally, that needs to be seen. So we have done some analysis on the basis of global markets as well as the intermarket analysis and some broader market indices analysis. And on the basis of that, we have concluded our view on the markets for the next fortnight. So yes, I am going to discuss about the global markets development as well as the technical developments. And today I am joined by my colleague, Mr. Siddharth Deshpande, who's going to throw some lights on the derivative development and how market and Nifty and benchmark indices are looking on the basis of derivative data. So hi Siddharth, how are you?
Good. Welcome everybody to the webinar. Yeah, over to you, Vinay.
Yeah, sure. So before starting presentation on the Indian markets, I would like to show the global developments, how the global markets have performed in last 1 week and as well as the month in last 1 month, and how we have performed compared to them. So as you can see on the screen, is my screen is visible, right, Siddharth?
Perfectly.
Yeah. So as we can see over here, for the week, the Dow Jones was down by 0.67%, but for the month, it is up by more than 4%. S&P has also has been 3.51% month 1 month return, but it has closed positive for the week. So S&P 500 has outperformed Dow Jones, and as we can see here, Nasdaq, the US IT index is up by 0.5% this week, and for the month, it is 4.64%. So Nasdaq has clearly outperformed for the month as well as for the week. And we can see over here this global market like FTSE, Germany market, these European markets also performed very well for the month as well as for the week. And we can see both a positive tick on the weekly basis as well as on the monthly basis. So all global markets have performed very well in the last week as well as the last 1 month. And if we were to see the performance of the Nifty has relatively underperformed. Here we can see that the weekly performance of Nifty is negative minus 0.31, and for last 1 month the return has been minus 0.39. So comparatively, as compared to the US market where we saw a rise of more than 4.5% in last 1 month, Nifty has given a minus return, and Sensex has also gone down by 0.4%. So this way we have underperformed. We have been underperforming since long for 3-4 months. And this the main question arises here is where this underperformance is going to end, because our rupee has been depreciating significantly. We recently saw that rupee touched a level of 91 against the dollar. So that was the main concern behind the equity market sentiment. But some improvement has been seen in last 2-3 sessions there. So definitely there could be a catch-up rally from the Indian market as well. It looks like that. So the performance of Nifty has not been good so far, but global market technical setup has been good. They are performing very well. US market has resumed the uptrend after running correction. So that is going to augur well for us Indian market as well. So in that sense, everything is placed nicely as far as equity, global equity market sentiment is concerned. Now let us look at some commodities which are moving very sharply in nowadays. The first of all is the silver bees. So yesterday we saw that in US market silver bees has sorry, not silver bees but silver futures, the silver future levels yesterday went up by more than 3.5%. So already we have seen a significant stellar rally in the silver this year, and still it is making new all-time new highs day by day, and this is not stopping at all. So silver is continuously going up, and maybe because of the short squeezing, many shorts were there in the system and they have started covering the shorts globally. That is pushing this silver prices on the higher side. So it is outperforming the gold. Gold is also trading near its all-time high, but silver is rising like anything, and it is into a full momentum, bullish momentum. This is the one asset class where entire money is going. It looks like that globally. So this is into a continuation of an uptrend, and that is why we are seeing that in Indian market as well, the silver ETFs have gone up sharply. If I were to look at the gold, so US gold has also run up. At yesterday it was up and it is hovering around its all-time high. The current level is around $4387. The all-time high was seen at around 4409. So yes, this is also rising, but the momentum has not been that sharp as compared to the silver. So gold and silver both are shining. So all that glitter is gold. That adage is getting right now, and silver is uh, adding the momentum day by day. So they are into continuation of an uptrend, and metal as a sector can do well. Not only gold and silver, but we can see strength back coming to the industrial metals as well. So if I see the copper chart, this is nothing but the US copper, the COMEX copper, which is also trading near the highest level of the recent rally. So if copper is rising, we can say that the industrial metals are doing good, and this is going to affect the global commodities in the industrial metal side. So recently we have seen that because of the silver and the copper rally, the Hindustan Copper and Hindustan Zinc kind of stocks have been rising. Vedanta has been rising because they are producer of silver, copper, as well as some other commodities which are actually seeing a catch-up rally behind the silver and gold. So not only the precious metal, but this entire industrial metal have also started doing well, and this is going to continue. That's what looks like in the coming days. So gold and silver have been doing good. The important development is the USD INR. So I just mentioned that USD INR pair reached a level of 91. So that was the all-time low of the rupee. So significant depreciation by the rupee against the dollar. But what has happened in the last three sessions, that is very important. So as I said, the 91 was the recent USD INR high. And after that, we have seen a sharp fall in the USD INR pair. That means rupee has appreciated against the dollar significantly in last 3 days. So from the 91 odd level, rupee has come down to 89.25 odd level. That is a significant depreciation in short span of time. This is going to impact positively to the Indian equity market sentiment, because it is a very good positive development. In the recent past, we saw that this was the only factor which was affecting negatively, and that is why in the broader markets were not performing. But since rupee has started appreciating against the dollar, the sentiments have changed in the equity markets also. So it is one of the positive sign. And because of this appreciation in rupee, recent appreciation against the dollar, it might happen that silver and gold keeps on rising in the US market and globally. But because we are major importer of this precious metals, because of the appreciation in the rupee, the intensity of rising in the gold and silver, the local gold and gold silver, I'm talking about the MCX level and Indian physical markets, those commodities will not rise sharply in the Indian markets because rupee appreciation has started, and this is going to limit the upside for the Indian commodities, the precious metals. So yes, there has been a positive development in the US market, but because of the rupee appreciation, precious metal in the local market will not perform that much as compared to the global markets. So this is a development. This is most important development which has happened last week. Now let us look at the Indian markets technical analysis. Yeah. So 1 minute. Yeah. So this is the Nifty daily chart. Now we can see over here, this was a lower top, lower bottom formation on the Nifty daily chart, and it was clearly struggling. But the important thing is that you can see over here, this orange line, this is nothing but the 50 days EMA, which was acting as a support. So in the month, in the starting of this December month, Nifty found support at 50 days EMA and bounced back. Again, it fell. And on Thursday, we saw that it again took support there and bounced back. And on Friday, there has been a good movement. Yesterday, there was a breakout from this downward sloping trend line. This is the first positive development, and this has made a bottom around 20. 25,726. So this 25,726 is higher than the previous bottom, which was around 25,693. So higher bottom has been made. Now that needs to be confirmed with the higher top also. So where is the higher top? The higher top is placed at 26,058. So if Nifty were to cross 26,058, it will confirm the higher top, higher bottom formation on the daily chart, which will negate entire negative setup of lower tops, lower bottom. So we are waiting for this breakout to happen. First breakout has come as a trend line breakout. Now 26 above 26,058, there will be a confirmation of a bullish reversal in the Nifty. So yes, there has been a positive development, but needs to be confirmed with the breakout above this level. Gift Nifty is suggesting a 140 points higher opening, and that may trigger a higher opening on Monday as well. So yes, bias is positive till now, and this 25,726, which was the weekly low, can act as a strong support going forward. So those who are holding Nifty longs can keep this stop loss in mind, and having a positive view in the coming days will be a better strategy for the Nifty. So these are the important resistance and supports which you are going to get from our weekly technical report as well. So I will insist all of you to go through our entire weekly report, which is going to be published by today evening. So yes, indicators has also been showing some positive crossovers. So yes, bias is positive in the coming days, subject to some levels to be taken out on the upside. Yeah. Now let us look at the weekly chart. Now, why our bias is positive and there is a probability of breakout on the upside is higher, because this weekly time frame, the higher time frame, is suggesting higher bottom formation. So higher top, higher bottom formation is there in the weekly chart of Nifty, which suggests that the primary trend was positive. It was just a temporary running correction in the Nifty daily chart, but weekly chart is continuously making higher top, higher bottom formation, and as you can easily see here. So that is why the probability of getting breakout on the upside is higher. These indicators and oscillators has also been placed on the stronger side, which is going to support the Nifty in the coming days. Now talking about the Bank Nifty, this is the Bank Nifty daily chart, and Bank Nifty has been into a running correction since long. For entire this December month, Bank Nifty has gradually come down, but we can see there has been a narrow movement and narrow correction in the index. But overall, still it is placed well above the 50 days EMA. This is 50 days EMA. And we can see this is a falling wedge pattern on the daily chart of Bank Nifty, and the breakout is placed around 59,300. So current level is 59,069. Any 300 points higher movement from this level will result into a breakout from the falling wedge pattern. This may turn out to be a positive sign, and ultimately we can expect in that case Bank Nifty will hit an all-time high above the level which we saw recently. So yes, it is into consolidation, waiting for the breakout, and breakout is above 59,300. Strong support is there between 58,350 to 58,700. So 58,350 is the 50-day EMA, and 58,700 is the low which was seen on the Thursday last week. So this is a very important development. So these are the supports that you need to keep in mind for keeping a long positions in the Bank Nifty spot. Now, broader markets, yes, there has been some recovery. Till now, we have seen that many stocks, the median performance of the broader market stocks was quite significant on the lower side, because Nifty was trading at all-time high, but the median stocks performance has been quite low. But some improvement has been registered by Nifty 500 in last two trading session. So this is a monthly chart of the Nifty 500. So there was a breakout couple of months back, and after that we saw it went into a consolidation, fell also, and found support on the breakout trend line. So this is a positive development. So from the lower level, Nifty 500 is bounced back nicely. So this is a positive sign after the throwback fall. So there is a good chance that the kind of fall we have seen in these micro cap and small cap stocks can see some relief rally from here. I'm not talking about the overall outperformance and the significant reversal, but yes, at least we can expect relief rally in the cash-based stocks and small cap and micro cap stocks, depending on this particular chart. Now, I was talking about the microcap index. Now this is nothing but the short-term chart, the daily chart of microcap index. This is the Nifty microcap 250 index daily chart. Now this is a candlestick formation, which we call it as a morning star candlestick pattern. This is a typical bullish candlestick pattern on the daily chart, which indicates that there is a possibility of trend reversal. So micro cap index has formed a higher bottom here. This was the previous bottom, and higher bottom is seen in the last week, and follow buying was registered in yesterday's session. So this has resulted into a bullish reversal pattern of the morning star. So this may give a good rise from here. RSI has also exited the oversold zone and is trading above 40. So that is also a additional benefit and positive sign for this particular index. So expect relief rally in the micro cap index from here. For last 2 months, starting from the November, there has been a significant sell-off in the cash-based stocks. So we are expecting some relief rally here. Same with the case with small cap 100 index. So this is Nifty small cap 100 index. Higher bottom formation is there. RSI, there has been an inverted head and shoulder pattern breakout on the RSI on the daily chart, which indicates, and this is the doji reversal pattern. There was a long leg doji candle on the Thursday, which is confirmed by yesterday's up move. So we can expect some improvement in the small cap indices as well. Which sectors can do well? So this is one sector which is continuously doing good, as supported by the global commodities, and this is nothing but the Nifty Metal Index. So there was a downward sloping trend line breakout last week, last week I'm talking about, and after that it went into consolidation. Mixed performance was seen by the metal stocks. Some were going up and some were consolidating. And that is why consolidation was there in the overall index of the metal. But yes, the breakout is well valid from here, and it can resume its uptrend. So as I said, that silver is continuously going up, copper has started rising, aluminum has been rising. So these all commodities globally have been rising, and that is why Indian commodities, industrial metal as well as the precious metals were doing good. So stocks with the positive bias are Hindustan Zinc, Hindustan Copper, Vedanta, Hindalco, and Nalco. These are not, make sure that we are not recommending all this. These are not the recommendations, but the kind of setup is there in the global commodities. It may positively affect the stocks like Hindustan Zinc, Hindustan Copper, Vedanta, Nalco, and Hindalco. And their overall trend has been positive, which is going to support the overall momentum, and the Nifty Metal Index is likely to perform very well in the coming days. Now, the other sectors like auto and infra. So auto has been into uptrend. This is one of the sector which has done well and participated very well in the Nifty upward rally. So this has also seen a nice recovery on the yesterday's session. It seems that it is on the verge of giving breakout from this downward sloping trend line on the daily chart, and it found support at 50 days EMA. So auto sector is one of the sector which is on our radar. If market were to sustain at higher level, auto sector and stocks can do well. The another sector which has recently given some good movement is the infra sector. So it is a very big sector. Many constituents are part of this particular index. Not only the infra like the L&T, but it also comprises many Adani stocks like Adani Ports, Reliance Industry is also part of that, the Bharat Forge and Ashok Leyland. This auto sector, some of the cement stocks, some of the infra stocks, some of the metal stocks are also part of this particular index. So it is not limited to infrastructure companies, but it is a big index, so needs to be sent. So infra as a sector can do well and participate in the coming days. So I would like to conclude here what we have discussed till now. So Nifty has found support on its 50 days EMA and bounced back. That is a very good sign. Nifty has formed a higher bottom at 25,726, and by not breaking previous swing low, this was the previous swing low. It has not been breached, and a higher bottom has been formed at 25,726. Any level above 26,058 would result into higher top formation, which will confirm the bullish trend reversal. Support has shifted to 25,726. This should be the stop loss in long position. On the upside, immediate resistance is seen near 26,330. This is the recent swing high. This is going to be a first hurdle for the Nifty. Once that is taken out, we can expect 26,600. Bank Nifty is trading in a falling wedge. A level above 59,300 in spot would result into a fresh breakout on the upside. So this is the important level, 59,300. Supports are seen at 58,700 and 58,350. After long duration, micro cap and small cap indices have found some strength and relative outperformance on the short-term charts. So especially in the last two trading sessions, we have seen a recovery in the broader markets, and we feel and we believe that going by the technicals and the overall sentiment, it might happen that we may see a continuous relief rally in the broader markets. It seems that after extreme oversold conditions, smaller stocks are likely to see relief rally. I already said this. However, sustainability at higher levels should be reviewed as large cap is more likely to hold an uptrend and margin of safety would be better. So for short term, it might happen that relief really can be registered in the mid cap and small cap, but sustainability at higher level will be more in the large caps because the primary trend of large cap stock is much more positive than the small cap mid caps. So yes, we can expect a bounce back, but overall sustainability higher level will be there in the large cap. So at higher level, we need to also look at the profit booking in mid cap and small caps. So rupee has been has registered a significant recovery on Friday. There was an appreciation of more than 1 rupees against the dollar. So which augurs well for the equity market sentiments in the short term. Global market technical setup is strong and that will continue to support the Indian market as well. Auto, metal and infra. These are the three sectors which we like technically in the for the coming days. Metal especially because supported by the global commodities, and these are going to be an outperformers in the coming fortnight. So the strategy for the Nifty should be Nifty along with the broader market indices have shown first sign of bullish trend reversal. Existing longs in the Nifty should be protected with 25,700. On the higher side, we expect the immediate resistance at 26,330, followed by 26,600. This was also been mentioned by our technical reports that there was some pattern which was indicating a target of 26,600. So this is the positional resistance for the Nifty in the coming days. So guys, yes, there has been some positive developments, and because of that, we are expecting broader markets to improve from the current level, and any level about 26,060 in the Nifty would confirm bullish breakout, and that may result into a fresh all-time high in the Nifty. Then ultimately we can see a 26,600. Long should be protected with the stop loss of 25,700 on closing basis. So this is what I wanted to share. Now I would like to invite my colleague Siddharth Deshpande, who is share his view on the derivative analysis. Siddharth, over to you.
Yeah, thanks, Vinay, for such a wonderful presentation. Let me share my screen. Yeah, my screen is visible.
Yes, it is visible. You can go ahead. You can presenting mode. Keep it on presenting mode, please.
Yeah, it's in presenting mode only.
Okay, you can go ahead.
Yeah. Welcome everyone to HDFC Securities Prime Derivative Weekly Derivative Outlook webinar. In today's session, we will be discussing on Nifty, Bank Nifty trends, open interest analysis, key trading levels, sectoral positioning, and FI's activity, and overall market sentiments. So this is a Nifty 5-day chart. You can see initial day Nifty has corrected by making lower top lower bottom, where OI is also topped out, and from that level we have seen a bounce in Nifty and close toward 26,030 level. So overall, if you consider in weekly basis, Nifty has closed down by 0.40%, where open interest is also fall by 3.80%, which suggests that there is a long wind on Monday. But if you see that in last 2 days, I think short has been covered, and there might be a fresh open interest built up in on Monday session, because SGX is also suggesting some 140 point Nifty, so we can expect a positive momentum continue in this Nifty. Second thing, PCR is around 1.13 level, which is neither overbought or neither oversold, so there is ample room for Nifty to rise from that angle. Even if you see that IV level, IV has also come down to from top of, let's say, 10.5 to 9.10, which is also in comfortable. This is a PCR chart. So PCR initial days it has over trading upon 1.12 level. Again, it has fall, and after that is against continuously rising, which is a good indication. It's also support that market may rise in current session for Nifty. Same case with the Bank Nifty also. In the initial days, it has corrected and I made a bottom around 58,900 level. From that level, we can expect a Bank Nifty move higher. So basically Bank Nifty also forming a higher top, higher bottom formation, but it has not able to cross that 59,300 hurdle level. So on Monday, we are expecting that this hurdle will get crossed. If you see the weekly data, Bank Nifty has fell almost 0.70% in a week, and open interest is built by 3%, which suggests short built up. But I think that can be seen, that picture might be changed on Monday. This is basically PCR, where you can see that resistance levels and support level for the Nifty. This is the 26,000 candle, where we can see over 17.27 lakh open interest built up, followed by 26,200, which is the next resistance level for the Nifty in future, and followed by 26,500 level. So we have to watch these two level on the upper side, 26,200. Once Nifty is able to cross that 26,200 level, the next resistance is around 26,300. As Minne pointed out, 26,300 is the major resistance level according to technical, where we can see a minor build up also. So I think on the higher side, resistance is around 26,200, 26,500. On the downside, there are major resistance around 25,000. Support is around 25,800, 25,900, and followed by 25,500. So if Nifty able to correct from that level, on the higher level, then first support level to watch is around 25,900 to 800 level on the downside. Coming back to the Bank Nifty. Bank Nifty has been trading, and you can expect the range of Bank Nifty in next fortnightly around 58,500 to 61,000. Bank Nifty relatively not that much strong, but I think on Monday my picture might be different. So currently Bank Nifty has a resistance around 60,000 and followed by 60,500 level, where we can expect a Bank Nifty to move higher. So if once it crosses the 60,500 level in coming session, then we can expect Bank Nifty heading to 61,000. On the support side, 59,000 is a good support level for the Bank Nifty, followed by 59,500. So on the downside, we can watch these two levels for the Bank Nifty. This is basically a sectoral analysis. We can see telecom, FMCG, pharma, and banking, which is saw built up of long position on weekly basis, whereas power in finance, chemical, and cement, which are some built up of short positions. But this picture might be changed on Monday, because I think SGX is suggesting some 140 points on the upper side. This is a heat map of weekly, where Polycap, Shriram Transfer Finance, PNB Housing, Minda has built up of long position, whereas long unwindings was seen in Voltas and LTIM. Short build up was seen in Blue Star, Chola Finance, and short covering was observed in Tata Elxsi, IDEA, PIT, and NBCC. This is the weekly data. This is FIS to long to short ratio in index future. Basically, FIS still heavily on shorter side. The just index has rose from 0.09 to 0.10. So if market sustain on positive direction on Monday, then we might see a short covering by FIS also, which can push that this index towards 0.6, 0.19 level in coming session. So watch for this level. So we can expect a major short covering by FIS on Monday and Tuesday if Nifty sustains on positive side. So overall outlook for the Nifty is like previously discussed. The Nifty has a major resistance around 26,200. If it is able to cross that level, then next resistance is around 26,500, where we are expecting a Nifty to head in future level. And if Nifty is able to manage cross that 26,500 level also, then we might see a heavy short covering, which may push Nifty towards that 27,000 level in coming session. Whereas on the put side, 25,800 and 25,500. So 25,800 and 900 is a good support level, where the maximum put writing has already happened. So if this is if Nifty holds that level, then we might see a positive momentum continue. But Nifty is able to breach that 25,800 due to some negative news or something, then we might see Nifty heading towards 25,500 level. But looking at the current scenario, we are expecting a positive momentum continue. But for long, you can keep a stop loss around 25,800, 900 level for all long positions. Same case with Bank Nifty also, though Bank Nifty has saw a built up of short position, but on Monday we might see another picture. So we can expect the Bank Nifty heading towards 60,500 level. Ultimately, for that, traders can keep a stop loss around 59,000. So once that 60,000 level is crossed, 60,500, next level is around 61,000 level. Yeah, over to you, Vinay.
Okay, thank you, Siddharth, for the derivative insight on the Nifty and Bank Nifty. So it is coinciding with the technical developments. So we have to follow the levels, and though there has been some choppiness in last 1 month, but hopefully we will be able to come out from this underperformance and choppiness in the coming days, because brutal selling was in many cash-based stocks. And rupee depreciation was there, but that has reversed, I think, for the last 3 sessions. So it is going to impact positively. Now, those who want to ask any question can ask their questions on the chat window, on the question and answer session or chat window. So we'll be happy to help you on that part. So stock specifically will not be able to answer on any particular questions on the compliance basis, but yes, we are here to help you with the sectoral view, index view, or any particular another question which is related to global market. Yeah. So the first question I can see on the screen is the view on the IT index. So IT index has been on the underperformer for the last 1 year, but in last 1 month we have seen a nice recovery. So that there has been some positive movement in the IT index in last 1 month, and some of the large cap stocks have been holding at higher level. One of the stock which is doing good is the Infosys from the large cap segment. And from the mid to large segment, there has been positive development in Persistent and Coforge technically. So few stocks have really done well. Wipro has also done well. So they are into a pullback mode or recovery mode. There was some positiveness seen in the global markets. The Infosys ADR was up by more than 38%. That was a technical glitch, and that went up by rumor also. So that actually settled down by only 5% up yesterday. So around the globe, a lot of volatility and uncertainty is going on. But yes, the trend has been positive for large cap IT stocks, and they are likely to continue the uptrend. So yes, we can expect an extension of the recovery, and then the positive days are ahead because large cap stocks technically are looking good, and we can expect 3 to 5% more upside in the index as well as many of the stocks in the IT space. And but yes, the way things have reversed in last two session, and as rupee has started appreciating, it might happen that the advantage of stronger dollar is going away from the IT and pharma space. So if rupee continuously appreciating against the dollar, then that will help more of old economy stocks rather than defensive, the exporting service oriented stocks. So yes, overall trend has been good, but one can continue to hold on the large cap stocks, but momentum which was there in the previous sessions can reduce a bit because of the appreciation in the rupee.
Vinay, one of the participant is asking question about reality index. You can, we already shared the chart. Can you just brief on that?
Yeah, so Nifty Reality Index has been struggling. It is one of the underperformer, but it is trading below the long to medium term moving averages, like it is trading above below 20, 50 and 200 days EMA. So it is momentum wise primary trend has been negative. There was a pullback rally seen yesterday. So yes, as many mid cap, small cap stocks started moving up, some of the underperforming sectors have also seen some recovery from the lower level. So it is a classic case of a pullback from the lower levels. So yes, we can see some extension of the pullback because of the short covering. So though it is not technically bullish on the positional chart, but on the short term charts, we expect bounce back to continue. Right now, the Nifty Reality Index is placed at 885. We see a strong resistance around 920. So 3, 4 to 5% upside can be registered by the realty index on the back of short covering in the market. As Siddharth has already pointed out that the long to short ratio of FIIs in the index future has been quite low, oversold level. So short covering may take place, and that may give rise to the large cap reality stocks. So yes, there is a positive development on short-term charts with stop loss definitely can create a long position in the sector. So 856 is a strong support for Nifty Reality, and we are expecting at least 4 to 5% bounce in the reality sector from here.
So Vinay, everybody is asking about that silver ETF, gold ETF. I think we have also published that report and that target is already achieved. So can you brief on that key, whether this momentum will continue in silver or gold? Yeah, there may be a consolidation, a minor correction. You can just brief on that.
Yeah, so definitely there has been euphoric movement in the gold and silver ETFs, especially the silver, because the globally silver prices have seen a sharp upsurge, and that has resulted into a sharp bounce back in the local market as well because of the ETFs. So silver bees, it was when it was placed at 156, we came out with a special report on precious metal covering the ETFs on silver as well as the gold. So both have surged well. Silver has achieved the target. Our target was 188. That was achieved in few days back, and that is continuously rising and now above 194. So gold is yet to achieve our target, which is around 123. Silver has achieved the target. So yes, there has been a euphoric movement, but rising. taking position at every higher level is not advisable because of the sharp run which we have seen. Whenever it starts falling, it will be sharper also. So if it is going up by 4-5% in a day in the global market, it might happen that they may see a sharp fall also of 4-5%. And since rupee has started appreciating, the intensity of going up in the local market and the local ETFs will be lower than what we saw last week and last months. So it, though we are bullish, it is into a continuation, but the momentum is likely to reduce from here, and intensity of going up will be reducing. So it is better if you look for the lower levels to accumulate long positions. It is not advisable to buy these ETFs at this particular time. Better to wait for 3-4-5% correction, and then you can think of going long.
Yeah, in the international market, yesterday Infosys ADR by 43%, but finally settled around some 5.6%. You can look at this event as just one of the technical event due to short squeezing. There is no fundamental, there is no news backing to that particular event. Because of that, even the SGX has moved up now. Sorry, GIFT Nifty has also moved some 300 points, but after that it has corrected and finally settled around 150 points up. And even ADR is settled around 5.65%. This is one of kind short squeezing event. You can search on Google, you will get more information about short squeezing. But fundamental and technical, so but there is no fundamental backing news from the company side also. Yeah. So now they're asking about what about pharma sector. So I think you already explained, but just you can throw some 1 or 2 lines on that.
Yeah, so pharma has been into uptrend, and this is one of the defensive sector when markets were actually facing a negativity because of the rupee depreciation. But this was the sector which was actually getting benefit of it, because IT and pharma, these are the main exporting sectors, and they were actually getting benefit out of it. But pharma can consolidate. Overall uptrend is there. Selectively, some stocks have really been doing good, like Laurus Lab and DV's Lab. These stocks have particularly did very well, and they are looking strong on the charts. So yes, it is likely to remain strong. But again, I said that IT and pharma, these are the two sectors which can stop the momentum which was there. So it may consolidate. We are expecting IT and pharma to consolidate from here, though the primary trend has been positive for pharma. So better to wait for the lower levels to accumulate long positions. Their old economy stocks and sectors are likely to outperform the defensive sectors like IT and pharma. So better concentrate there for the short term.
Okay, thanks, Vinay. So one of the client is asking whether there will be any dollar appreciation impact on equity market and overall Indian economics over the time. So you can just brief on that.
So falling dollar is a positive sign for emerging market, but the Indian markets have altogether behaved differently against the emerging markets. And though we saw a fall in the dollar in the last many months, but Indian markets did not find that advantage over it, and sharp depreciation was there in the rupee against the dollar. But yes, falling dollar is obviously a positive sign, but we need to track rupee against the dollar. That has started appreciating. That is a good sign. And that is going to affect positively to the many sectors in Indian markets, especially the old economy stocks, the capital goods, then banking and finance, auto sector. Every sectors except IT and pharma will benefit from the appreciating rupee. So yes, dollar should remain under control, and Indian rupee should outperform from here compared to the dollar. That will be the best case scenario for the currency as well as the Indian equity markets.
Yes, purely currently the Indian USD INR is facing resistance around that 91 level. So traders needs to watch that 91 level, whether it is holding or not. If it is not able to cross that 91 level, it is taking double top, I mean making double top pattern or something like that. From that level, we can expect a correction. So 91 levels to watch for coming sessions. If it is holding, then I think it is good for Indian economy also. Yeah, I think last question. So basically, traders are asking about the comparison between banking and FMCG. Which sector is looking good for next fortnightly? Yeah, over to you.
Yeah, so FMCG is a sector which has actually not at all performed for last many months. The large cap stock like HUL and IT has been into a downtrend, and that is hurting the overall sentiment in this particular sector. And banking and finance is one of the sector which has done exceptionally well in last 1.5 year. Many NBFC have surged, and many private sector, especially the PSU banks, have performed very well in last 1.5 year. So they have already risen, shown their performance, but going from here, it looks like that because of the short covering and because of the oversold scenario in the FMCG sector, that sector can also see some positivity, though there has not been positive development on the technical charts as of now, but they looks more of a oversold right now. And we are approaching the last quarter of this particular financial year, January, February, March. So the recent result which is going to be announced by the companies by the FMCG is expected to be better according to our fundamental FMCG analyst. So I think there may be a pullback rally in the FMCG. So going from here selectively, FMCG stocks can do well. And yes, finance stocks are continuously in uptrend. So that can be continuously held. So it is very difficult to compare between both of them. We are expecting pullback rally to come in FMCG in the coming days, and finance stocks are continually looking stronger. So for short term, yes, alpha can be generated in both the sectors. But I think FMCG sector is one of the sector where one can start accumulating the long positions for the positional targets.
Yeah, thanks, Vinay. Any closing comment on the market? So
Yeah, so thank you everyone. And the last comment would be that there has been definitely improvement, long awaited improvement in the broader market. We have seen bad times in last 2 months because broader markets were not performing. Nifty was at all-time high. So the main question for every investor was Nifty as is at all-time high, but why our portfolio is going down? Why some short-term recommendations are not working from the research side? So that was a difficult question and difficult to answer that question. But as I said, that there was a significant sell-off going within the broader markets, and the median stocks performance was quite bad. So it is like some of the stocks in the Nifty has been holding the index up, but broader markets were not performing. But the way we have seen some improvement in the rupee as well as the micro cap and small cap indices in last two trading session, we are hoping a strong pullback in the broader markets, and that will definitely help us and help traders and investors to generate alpha in the shorter term trading ideas. So yes, we are moving ahead for the next fortnight with a positive bias and positive broader market recovery. So I would like to wish all of you to happy coming fortnight and a profitable trading fortnight for everyone. And here I will we would like to conclude here. Thank you everyone for joining in this fortnightly market outlook webinar. And for any particular query, you can reach us through our branches and our mails. We will definitely would like to help you in that case. Thank you everyone for joining. We can conclude here.
thanks,
Thank you,
everyone.
Siddharth.
Thank you. Thank you.
Yeah.
Yeah. Bye.